I remember the exact moment I realized I had been completely wrong about investing. Not slightly wrong. Not, I could have done better. I mean catastrophically wrong. $10,000 gone. Not lost in some complicated Wall Street scandal. Not stolen by a scam. I lost it the honest way, by following advice that sounded smart but was completely disconnected from how markets actually work. And the worst part? I thought I was doing everything right. If you're investing right now, there's a very high chance you're making the same mistake I made. And if nobody tells you early, the market will teach you the same lesson it taught me. But the market charges tuition, and mine cost $10,000. Let me take you back to the beginning. Like most people, my journey into investing didn't start with deep financial knowledge. It started with excitement. You see people online talking about stocks. You hear stories about people doubling their money. Everyone seems to have an opinion. Everyone seems confident. And you start thinking, how hard can this really be? So I did what most new investors do. I opened my brokerage account, funded it, and started buying stocks. At first, everything felt like a game. The market goes up a little. Your account goes up a little. You feel smart. You start watching YouTube videos about investing strategies. You read tweets from self-proclaimed trading experts. You join forums where everyone claims they've discovered the next big opportunity. And slowly, without realizing it, you start believing that investing is about picking the right stock. That was my first mistake. Because once you believe investing is about picking the next winner, your brain starts hunting for excitement instead of logic. Every new company looks like an opportunity. Every dip looks like a bargain. Every headline feels like a signal. And before long, your portfolio starts filling with what I call hope investments. Stocks you bought because someone sounded confident. Stocks you bought because they were trending. Stocks you bought because they already went up and you didn't want to miss out. At first, everything seems fine, until the market reminds you it doesn't care about your hopes. The first drop is small, 5%. You tell yourself it's normal. Then 10%. You say, it'll bounce back. Then 20%. Now you're nervous, but you refuse to sell. Because selling would mean admitting you were wrong. And the human brain hates admitting it made a mistake. So instead of selling, you do something even worse. You double down. You buy more of the losing stock to average down. You tell yourself you're being smart. You're lowering your average price. But deep down, you're not investing anymore. You're negotiating with reality. And reality is brutal in the stock market. Because markets don't reward hope. They reward discipline. Within a few months, my account started bleeding. One bad trade became two. Two became five. And suddenly the numbers stop being abstract. When your portfolio drops a few $100s, it feels like numbers on a screen. But when it drops thousands, you feel it in your chest. Every morning you check the market. Every red candle feels personal. Every headline feels threatening. And that's when the emotional spiral begins. You stop thinking clearly. You chase the next opportunity to recover your losses. You jump into new trades without proper research. You try to win back the money quickly. And that is exactly how investors destroy their accounts. Because desperation is the worst investment strategy in the world. I remember the day I finally opened my portfolio and saw the total loss. $10,000. Gone. Not overnight, not in a crash, but slowly, decision by decision. And sitting there staring at that number, something hit me harder than the financial loss. I realized I had never actually learned how investing works. I had learned how to chase. I had learned how to react. But I had never learned how to think like an investor. That moment changed everything. Because once the pain is real enough, your brain stops searching for shortcuts. You stop looking for the next hot stock. You start asking better questions. Questions like, why do most professional investors focus on risk first? Why do the best portfolios look boring? Why do experienced investors hold positions for years instead of days? Those questions led me into a completely different way of thinking about money. And this is where the biggest realization happened. Investing isn't about making money fast. It's about not losing money stupidly. That sounds simple, but it took me $10,000 to understand it. Because once you shift your mindset from, how can I get rich quickly, to, how can I survive the market long enough to grow, everything changes. You stop chasing hype. You start studying fundamentals. You stop reacting emotionally to price movements. You start focusing on probability. And most importantly, you start respecting risk. Professional investors understand something beginners don't. The first job of a portfolio is survival. Not excitement, survival. Because if you can survive long enough in the market, time becomes your greatest ally. Compounding begins to work. Opportunities appear. Mistakes become smaller. And suddenly investing stops feeling like gambling. It starts feeling like strategy. Once I understood this, my entire approach changed. I stopped trying to predict short-term price movements. I stopped buying companies just because they were trending. Instead, I began looking for businesses that actually made sense. Companies with strong cash flow. Companies with durable demand. Companies that could still exist 10 years from now. And instead of spreading my money across random ideas, I started concentrating on fewer, stronger investments. But the biggest shift wasn't in what I bought, it was in how I behaved. I stopped checking my portfolio every hour. I stopped reacting to daily market noise. I started thinking in years instead of weeks. That alone changes your psychology completely. Because when you zoom out far enough, markets stop looking chaotic. They start looking like long-term growth machines. Yes, there are crashes. Yes, there are corrections. But historically, patience has been one of the most profitable strategies ever invented. And this is something almost nobody tells new investors. The market punishes impatience, but it rewards consistency. After rebuilding my strategy, the results didn't change overnight. There was no magical moment where everything suddenly doubled. Real investing is much quieter than that. But slowly, the numbers started moving in the right direction. Losses became smaller, decisions became calmer, confidence returned, and over time, the portfolio recovered. Not through luck, through discipline. That same discipline eventually turned what had once been a devastating loss into something completely different. A lesson that changed how I manage money forever. Because today, when I look back at that $10,000 mistake, I don't see a disaster anymore. I see the most valuable financial education I could have received. If I had made easy money at the beginning, I probably would have learned nothing. I would have believed I was a genius. I would have taken bigger risks. And eventually the market would have punished me far harder. But losing early forced me to respect the game. And respect is what keeps investors alive. So if you're watching this right now and your portfolio is down, if you're staring at red numbers wondering whether you made a mistake, remember this. Every serious investor has a story like this. Every experienced trader has a loss that forced them to grow up. The difference between successful investors and failed ones is not intelligence, it's adaptation. The market will expose your weaknesses. Your job is to learn from them faster than they destroy you. Because the truth is, investing is not about avoiding every mistake. That's impossible. Investing is about making sure your mistakes teach you something before they cost you everything. And if there's one lesson that cost me $10,000 but saved me far more in the long run, it's this. The smartest investors aren't the ones who chase the biggest gains. They're the ones who survive the longest. Because in the market, survival is power. And once you understand that, the entire game changes.